if I'm getting started and I have like no money in emergency savings, I need my deductible to be super low, which means my premiums will be higher. But as I start chipping away and building that 6 months or 12 months or whatever kind of emergency savings I need to have for myself, then I can say, okay, because I have this in my emergency bucket, I can take my deductible from $250 to maybe even $2,500 for, I've seen homeowners policies with as much as a deductible as like 10 grand.
Yeah.
And you can get things wildly cheap on the monthly cash flow side of things.
And great coverage for that. But again, you're going to be paying 10 grand off the top. Well, you have that sitting over the side.
It's sitting there. It's already. And so the important thing is like, again, these are the little things that affect cost of insurance. And if you're just shopping for cost, you may be sacrificing the appropriate coverage. It's just really, really important to review these things. It should be reviewed as part of like this annual review. All right, welcome to a little money therapy. And we're still grinding through insurance because there's so much fun stuff to talk about, and it's super understandable. We are going to jump in. We got Mike Brooks here from McClary Insurance.
I guess.
And he's going to help us understand some big concepts when it comes to homeowners insurance, renters insurance. A lot of time, I think for most of my life, I just assumed I called somebody or went online, clicked a button, and basically I'm buying the same thing. And as I got into my job now, I started realizing that was not true. That it's like renters or homeowners insurance, whatever is applicable to you. It's kind of like a bag of Skittles. Like there's so many different things inside of one bag. And it's really not anybody's fault that they can't understand that. So we're going to try to give out some education because that's what we like to do. And we're going to try to help people understand some of that really confusing verbiage or what they're seeing on their homeowners or renters policy statement that, like I like immediately start like HO3, HO4, HO6, like what the heck is that?
Takes me back to whenever I took the test to get my license.
It's like, why don't you just call it what it is,
Well, it's like you said about the Skittles, right? Not only are there different colors within the bag, but there's a red bag, there's a blue bag, there's a purple bag. And hopefully we'll shine some light on that as we go today.
That's what we're going to do. So, Mike, we're going to start. I just want to know a little bit about you. So, who are you?
Well, first, let me say thanks for having me. Really appreciate this, an opportunity to talk on here. My name is Mike Brooks. I've been in the insurance industry for 3 years now. So prior to that, all the things that you just said, I had no idea that they even existed. So just basically what the insurance industry is overall, and how it functions, is kind of what I want to come across today. So hopefully some personal experience. But as I mentioned, I've been doing it in a variety of different roles. I started out selling, so having the conversation, what do the coverages do? That's what the license gets you, actually. Yep. So you can work in an office, but once it comes to coverages and how the policy functions, you have to be licensed. Sure. So that's that process. Once you get to that piece, then it's experiences with people. Like, what are you going through? What's your day to day? And high level, it's catastrophe. It's the big things. Insurance covers the big things.
Yeah. So family, tell me about your family.
Yeah. So I have young kids. Been married for 5 years. My wife and I, just blink of an eye. It feels like some days. We've got a 3.5-year-old little girl, and Braxton, our son, is going to be 1 actually here in about 10 days. So,
and one of the places that Mike and I enjoy together is the golf course. I'm better than he is.
Depends on the day.
No, I don't think so. So we're going to jump in. We've spent this month talking about like what is insurance. We've talked a little bit about liability. We've talked about the umbrella policies. We've talked about a bunch of different stuff. what I want to jump into really is the homeowners and renters side of the policy. Because as soon as you start to learn a little bit about this, you're immediately going to have so many follow-up questions because your situation is so unique. And that's the goal, the honest goal. Like, so we've been publishing, our end of the year checklist, and we want you guys understanding the changes in your net worth. So that way you can make sure your homeowner's insurance is still appropriate, or your insurance in general is still appropriate. We want you doing these evaluations, so that like you can just understand like what you need to change, right? But still, so many people don't know what they don't know, and that's what we're going to lead into because this stuff is really, really important. So again, let's just start. HO3, HO4, HO6. Like, what the heck does that mean? Like, what am I doing?
Yeah, great question. So the best way to describe it is falls under the umbrella of property insurance, right? Okay. So who owns it? So do you own it? Do you rent it? Do you rent it out? And what is covered under all those scenarios? So the probably high level of it, I own a home. Within that, I'm responsible for everything that has to do with that parcel of property and the building and the people that are
and the stuff
that are functioning. Yep, and the stuff, and then the other structures. So there's the foundation and the walls, the roof, and then anything that is not actually attached to the foundation is going to be other structures. That's going to be utility sheds. If there's a fence, anything that's just not to the bones of the house, right?
And that would be your HO3.
Correct.
Coverage. So if you need homeowners insurance and you're reading through the fine print of your contract to find out some of the details we're going to ask you to look into to make sure your coverage is good for you, one of the things you should see is that you have an HO3 of some variation, right? Mm-hmm. What if I own a home, but I rent it out to someone?
Okay, so that one would be more of a landlord policy.
Mm-hmm.
So owning the structure, your insurance policy would cover the dwelling. So that would be the frame, the bricks, the brick and mortar kind of part of it. And then the liability if something happens in there, but not really the contents. You could have a certain level of contents in there, but whenever the person that is renting it from you, let's just say it's a vacant space and they bring all of their stuff, based on your policy, none of that stuff would be covered. That would be their responsibility. It comes down to what's called insurable interest. What do you own? Who owns it, or what do you own?
And is that the same thing as me buying a condo to like let's say I go to Florida and I purchase a condo that I plan on renting out or using as more of like a commercial space or short-term rental kind of thing. Maybe I'm on a vacation there. Like, is that the same thing?
Great question. There's a version. So really, if there's an HOA involved, a lot of times they'll cover what's called studs out, and you're responsible for studs in. So that HO6 policy, if we're going to get fancy with the numbers and the terms, you would it would protect your stuff. It would protect some of the, I say the electrical and the studs is kind of where the barrier is. There's a little bit of a gray area because there's, cabinets, there's islands, there's actual contents on all the way working your way in. But generally speaking, it's going to cover your stuff inside the unit. And then the HOA master policy is going to be responsible for the roof and for the shrubs and for studs out.
Yep. So again, I go and I buy one condo inside of a condo building in Florida. I am and there's a hurricane that comes through, right? The HO6 policy that I would get is going to be that thing that covers my like cabinets, my furniture therein, right? Whereas the owner of the entire building is going to be that insurance policy is going to replace the roof or whatever the case may be, right?
Yeah, correct.
Okay. So we've talked about the HO3, we've talked about the HO6, we talked about the owner side therein. So again, if you're reading through and you own a home that you live in and you see HO6, like you're wildly off base, right? But if you're reading through, if you own that condo and you see, oh, this is my HO6 policy, you're on the right track. What if I go and I rent a house or an apartment, or what am I looking for there?
So a lot of times, if it's an apartment complex, they'll have a policy that they can offer to you with the package. That's kind of where people start. I always encourage to shop that around and to take a look at different carriers, because they're going to do what's best for them. And really, the liability part of a renter's policy, so that's what it covers: your contents and your liability. So if you leave the bathtub running and forget about it, leave, the water fills over and it starts to affect adjacent units above or below, well, now you're liable for that because you're renting that space. Yeah. So they're gonna want to take a look at that. But yeah, the other part of it is your personal contents.
And with that, like that's the HO4, right? Is that good? I think it's
I believe so. I'd have to brush up on it, but it sounds right.
I think so. Yeah, we'd have to check into that too. I'm pretty sure that's right. Let me know if I'm wrong, but I'm pretty sure I'm right. So there's a big difference between I own my building and I live in my building versus I own my building and someone else lives in my building versus I don't own the building, but I live there, right? There's many different things that start to get affected, coverages, requirements. If I own a building, and oftentimes if I rent at an apartment, they are going to have certain minimums that need to be met. So if you own a home that you're renting out, and they're like, and I go and I say, hey, I want to rent your house, and inside of that I say, yeah, I have renter's insurance. Like I could select potentially very minimal amounts of liability. Whereas if I cause more damage to the house you own, then now we're going to court and you're having to pay all these court fees and everything else. So a great practice, right, is to set certain minimums for those renter policies. And I think most apartments already do this, but if you're just getting into the rental game, you might not have thought about setting a higher minimum for people that are going to be renting the house that you live in for this liability.
So in that example, you're talking about like if you own it and you're renting it, so a landlord policy?
Yeah, like a landlord.
Gotcha.
So my policy, like if you were going to rent my house.
Got it. Right? I'm the renter.
You're the renter. Yeah, I could say, hey, Mike, I need you to have renter's insurance, but I want you to have at least $100,000 of liability in that renter's policy.
Yeah. 6 figures is normally where we start, because once you get into that level, lawyers are involved. They're not coming after you for 10, 20 grand.
Right.
A lot of times.
Yeah. So that's important. But another thing we were kind of in show prep talking about this, and guys, we're getting to a point, and we actually are working on a lot of stuff that we hope to get put out here shortly, maybe, I guess in the future, near like next year, about this generational trend that seemingly we go through in age groups when it comes to tackling our finances, right? The one thing that I'm noticing right now is that if you're like an older millennial, or if you're a younger boomer. So we were just like, I was just Googling this stuff, and I thought the baby boomers was like one thing. But the site that I found had divided them into boomers 1 and boomers 2, boomers 2 being the younger part, like younger people of that boomer generation. So I like that we actually officially get to call them boomers now, right? That's fun. The point is if you're in that younger group of boomers or older group of millennials, there's a really, really good chance that you have your parents potentially going to move in with you. Or maybe you're an older millennial or younger boomer and you have your kids moving back in with you.
Sure.
It can work either way. But the point is you need to do your own due diligence to make sure that everything is understood about what is covered, because, and like what the insurance company is going to classify these people living in your home. Are they going to be classified as renters? Are they classified as dependents? You need to report this to your insurance and have these conversations with your insurance agent, because if you assume that mom or dad's belongings are covered in case of total loss because you have a homeowner's policy, in fact, they may not be. So you're paying your homeowner's bill. There's a fire. Everybody's safe. Everybody makes it out alive. You get your big check. You do the rebuild, all this stuff. But you did, like, all the contents that your mom, your dad, or your kids owned may not be covered under what you have, right?
In that scenario, they definitely wouldn't be. If they're listed just as an occupant, that just means they reside there. A lot of times, if they have access to vehicles that also are in the garage, there's a reason why you want to take an account of that. But it really comes down to who owns it. If they own their stuff, then you actually, as the child in this scenario, if we're talking about your parent, you don't have insurable interest to even be able to insure their stuff.
Right. And so that's really important, because I know that we have clients where kids have moved back home in transition, or maybe just because of like COVID recently.
Or even if they go to college for a brief period of time, where's their permanent address at? If they're physically living there compared to like, okay, now they've found their own place and then they come back and visit, right? Yeah. So there's all those different scenarios for sure.
So it's definitely something that you want to communicate with your insurance professional. This is my situation, son or daughter, mom or dad are living here. What do I need to do? Because there's a good chance that they will need to get some sort of renter's policy set up, because again, back to that total loss scenario, mom and dad's cars parked in the driveway and the house burns down, affects the car. Like, all these things start to come into play. Like, what is my insurance going to pay for? Well, they're going to pay for my house. They're going to pay for all my stuff. But guess what? Mom and dad, or me, is going to have to replace their bedroom furniture set or their contents, their clothes, all that stuff. It's coming out of that insurance payment that I get for my stuff.
Well, and I'll give you an example too. So when we were waiting for our house to get finished up, moving back here a couple of years ago, there was let's say 8 weeks, 10 weeks, we were staying with some family in East Nashville. I still had the renter's policy. So I actually didn't know you could do this. When we sold our house in Old Hickory, we were able to rent it back for 3 months, while there's like different terms of the contract. So I had a renter's policy then, and then instead of canceling it, changed the address to where we were staying. That way it would follow our contents. So at the very least, rings, anything scheduled on there too. Yeah. You want to be able to, if you have something really specific that you want a stated amount to, you want to make sure that that's on there and written out in plain language.
And we call that a schedule.
Yeah, you would schedule that. Yes.
Yeah. Yep. Inside of renters policies, inside of homeowners policies, is my stuff covered if it's at a storage unit across town?
That's a great question. So we call that on-prem and off-prem, so premise, right? Okay. Everything that's in your house, of course, there's going to be property coverage for that.
Sure.
When you're looking at the off-prem option, say it's a storage location, you're going to have that personal property coverage, which is already a percentage of your dwelling. So I'm going to get some numbers out here. For a general package policy, you're looking at about 60% of your dwelling value. So for easy numbers, you have $100,000 in dwelling.
Okay.
Generally speaking, 60.
Let's do $1 million, because no property costs $100,000.
That's
anymore.
Fair.
Okay.
Yeah. Good call. So $1 million. Okay. So you're going to have $600,000 in personal property contents. Okay. Of that, 10% of that extends to your storage unit.
Okay.
So you would have $60,000 in coverage
for my storage unit.
For your storage unit now, at actual cash value too. So keep that in mind.
One thing that is important here, because we just had a client kind of family situation where they went through this. It is for kind of what's the insurance term for like instant loss versus like
sudden and accidental.
Sudden and accidental. Yeah, there you go. So I love having insurance people in the office when I need them. Because that's important, because for the specific client, it was deemed there was a leak, but it was deemed that it was like a smaller issue that happened over the course of the time while her contents were in storage. Sure. They said it wasn't sudden, it wasn't accidental, so all of her stuff completely ruined by mold, total loss, nothing coming from the insurance company. So it's going to
conversation for sure.
Well, and it's going to end up being a court issue to say, hey, storage unit, your facility wasn't what you said it was. Hopefully there's some sort of payout there, but it's not as simple as just calling the insurance agent. So,
well, a lot of people moving here are sending moving trucks and there's a lot of good faith moving parts. Mm-hmm. You don't necessarily physically go put eyes on it. So you're paying for this or going through the process, and Lord knows it's a 20-item checklist. I wish there was more time in the day, but again, get a professional, get someone you trust to have that conversation, and they'll be able to kind of take a little bit of that burden for you.
And all these things are questions that if you have an insurance policy, you should ask specifically about your own personal policy. Remember, this is just education to get the wheels turning. It's not like specific advice, or we're not telling you what your policy is, because I have no idea what your policy actually says. But that being said, it is, I guess, important to look through this stuff, because it can provide a lot of confidence. And it can also, if you understand everything that you have, you might end up saving some money by being able to waive certain things that other entities might offer you, right? So like my policy, right, will cover my contents in a moving truck when I'm moving from point A to point B. And even if that point A to point B ends up being a 3-day drive, my contents in that moving truck can still be covered. So if I happen to rent a moving truck and they're like, hey, do you want additional liability for the contents in this truck while you're on your drive, I can say no to that, because I'm confident in what I currently have, right? So, maybe that saves me $10 or something, right?
I have a pretty good example of that too. So I used to live out in Thompson Station, off of Buckner Road.
This is South Nashville, Tennessee.
South Nashville, Tennessee. Thank you for clarifying. I grew up around here, so I forget sometimes. So Buckner Road used to be kind of considered rural, right? There's been a lot of changes. This was over 20 years ago.
Okay.
But one of our customers is driving a U-Haul. One of the roads is kind of sunken down. U-Haul kind of tips over, pops back up, damages some of the contents. Luckily, it didn't roll over.
Yeah.
But he had just canceled his renter's policy 3 days prior before moving, because he didn't need it anymore. He thought he didn't need it anymore.
Sure.
Didn't call and ask about it first. And again, a lot of moving parts, trying to save money, trying to get from A to B, new jobs, all of that, right?
Right.
So unfortunately, there was no coverage in place for that. But actually, I think U-Haul kind of made a version of it within those details. But for us, we're trying to talk about autos and different stuff and going through the contents conversation. And a simple, if he knew about that, just when you're in transition, we like to send out a little template that like utilities, police department numbers. Yeah. This is what it's called a new mover checklist.
Yeah.
And that's part of it. What is in place now? What do we need to transfer over, and kind of ask those questions to get the wheels spinning.
Yeah. So it's just something to definitely consider in those transition moments, and again, moving my own contents. What if I'm moving mom and dad's contents? What if I'm moving my son or daughter's or my friend's contents? Can I store a friend's, if I store my friend's stuff in my garage while he's in between where he was renting and where he's going to be living, is it covered? Does he need to get a renter's policy?
Truck?
Right.
What happens in that scenario, right?
All these things are so important. And I think, one, where the people are moving like crazy all across the country. A ton of people are moving long distances into Nashville. Mm-hmm. But we're not people are moving all over. And so, and then we have, again, that huge aging population where, it's twofold. Either the older aging population that's moving back in with their son or daughter, or the aging population that's still kind of they're younger, but they're stable and secure where they're at. So guess what? Son or daughter can move back home and, go through this next transition. I know plenty of my clients that through COVID, their kids were living in like more expensive cities and stuff. But as soon as they were told, hey, you can work remote for the foreseeable future, They were like, hey, mom, hey, dad, can I move back home for a little bit? I can work remote. I'll save a ton of money. It'll really help me out. Absolutely, you can.
Yeah.
Call your insurance people and say, hey, what dynamic is changing? What do I need to have in place? What do they need to have in place? You're doing yourself a huge favor. We talked a little bit about the really confusing thing of, hey, I'm insuring my dwelling, the physical structure, for $1 million. 60%, I elect for 60% of my contents to be covered. And in that 10% is covering my off property stuff. So now we're down to 60 grand. Is that the same? Is that just standard, or can I change those coverages if I have some really expensive stuff, or if I'm going to be storing some really expensive stuff?
Yeah, so there's going to be an upper limit depending on the carrier who you choose, but I think it's generally up to $500,000,
Okay.
especially within the homeowners policy. That's going to function. The renters is a little more limited just because of the offering, and I think that's $150,000.
Okay.
But then if you want to, and I kind of mentioned it earlier, if you have an appraisal for like my wife's engagement ring, that's on our homeowners policy for a stated value based on the appraisal. No matter if it gets lost, whatever, no deductible. I just go and submit that, and I know that will at least be able to try to replace that version of it. You're not going to get the ring back, but at least you're going to get the stated amount for it.
Sure. And if I have, let's just say, for example, I have, $100,000 of property coverage and $100,000 exactly of property, except I also have that engagement ring that's 10 grand, right? If I schedule that ring, is it $100,000 of property plus 10 grand, or it's $100,000 of property with that $10,000 ring included?
So you would file it under the scheduled piece of it. That's going to have a different set of deductibles. So like for mine, I have a $0 deductible on there. I have a $2,500 deductible on my home policy.
Gotcha.
So I would be...
So it's kind of a separate thing.
And that's all, you can change that. You can toggle that. It really just depends. Again, how does it function? Right?
Which is important to understand how unique these things can be when we're building these policies out. Because in the fact that all of this is laid out in this like long document that has a lot of fine print, and we're talking like, it's not going to say your homeowner's policy. It's going to say HO3, and it's going to say all these confusing things, and you're going to see deductible here with this amount, but deductible down here with this amount.
All peril, this excluded. That
really
very wordy,
really confusing, and it's overwhelming and it's frustrating. But here's the thing. If I ask Mike to cover me and I need him, he's gonna do some homework, and he's gonna like look at my Elements app, and he's gonna look at my net worth, and he's gonna look at all the assets I have, the liabilities I have. He's gonna consider my family. He's gonna consider how and where and what structure of things that I own. Do I have an LLC? Do I have a partnership? Do I have a rental property? Like, he's gonna consider all this. He's gonna design a policy, because Mike's a good guy, and he's going to do that for me, right? And let's say I'm trying to do what I'm supposed to do as a good consumer, as a good person looking out for my own financial well-being. So Mike works up this huge thing, and he says, look, at the end of the day, this, and this is what you need. This is how it needs to be built. You will be well protected for a low cost of $3,000 a year, right? And I'm like, cool, Mike, thanks. I'm going to take this and I'm going to go shop around, right? If I take that to someone else that is a sleazy salesman, right? What can happen is they can say, hey, yeah, let me take a look at that policy. Oh, I can do better than this. And they're going to go into those small places in that fine print, and they're going to change it from where we were at $1 million, 60% and then 10% to maybe 900,000 with 40% with 5%. And they're going to say, oh, look, yep, like our policy's better. We just saved you, $500, right? If you live and you see billboards or commercials, hey, call this place and we'll save the average person $600, just in 10 minutes or whatever. And the reason why is because they're going to find ways to trim that protection, not necessarily like completely removing anything, but you have to be cognizant of what they're changing and how that could affect you or impact you. So I'm not telling you, I think you should definitely shop around when you're working with anyone. No doubt. Compare things. But if something, especially when it comes to insurance, is cheaper, I would immediately start, my wheels would start spinning. Why is this cheaper? And if somebody gives me a cheaper quote and I say, why is this cheaper? I'm like, I'm just good at my job. Like, no, you're a liar. Maybe, I don't know. But I would go back to that person and say, hey, look, I got a second quote. I told you I was going to go shop around. This one's $400 cheaper. Mike, why? And you can go through and say, look, like, see these things, like, see this, and this. And if you're going through on like an online place, you can build your own policy online, but oftentimes those little toggles and little things, you'll hit a drop down, you'll see a price +7, and you're like, oh wait, move that back down. Like, you want to keep it below a certain point, and cash flow considerations are so important, but livelihood is also very important.
Yeah. And I would say overarching, insurance at its core is transfer of risk. Right. That's why our relationship works so well. I mean, one, because you look at my finances for me and we have those conversations. Within that, the way insurance protects your assets is going to be on the back end, right? You're very good at the planning side and the forecasting and taking that holistic approach. Well, where we come out from it is when that catastrophe happens, because it's not if. Right. And so when you're transferring that risk, the price is important. Certainly, the last couple of years, different seasons that we've gone through, pandemic, political season, recession talks, this is what you do. This is how you educate people. Whenever you're looking at that, I'll give you an example. On my vehicles, I have collision and comprehensive, right? Won't go into the details, but definitely would love to answer any questions if you guys have them. But I raised my collision from $500 to $1,000. Do I want to pay for it, the policy premium on the front end, and pay less on the back end? Or because I have emergency funds in place, can I set that deductible a little higher to offset some of the monthly, or is there a full pay option, right? So even just something little like that I've done in the last year, because one, I want to make sure that it's functioning properly so that my family can meet our goals, but then also understand that as rates are going up, as it feels like food and gas and everything's going up. Right. Well, there's going to be consequences, not good or bad, but there's going to be consequences either way. And
that's, if you go back to one of our earlier episodes, I don't have this because I wasn't really thinking that I was going to say this, but you bring up a good point to talk about, can I raise my deductibles to save some on the monthly payments? If you go back and listen to one of our earlier podcasts, we talk about the financial order of operations, and one of our first order of operations steps is to create an emergency savings account. If I'm getting started and I have like no money in emergency savings, I need my deductible to be super low, which means my premiums will be higher. But as I start chipping away and building that 6 months or 12 months or whatever kind of emergency savings I need to have for myself, then I can say, okay, because I have this in my emergency bucket, I can take my deductible from $250 to maybe even $2,500 for, I've seen homeowners policies with as much as a deductible as like $10,000.
Yeah.
And you can get things wildly cheap on the monthly cash flow side of things.
And great coverage for that. But again, you're going to be paying $10,000 off the top. Well, you have that sitting over the side.
It's sitting there. It's already. And so the important thing is like, again, these are the little things that affect cost of insurance. And if you're just shopping for cost, you may be sacrificing the appropriate coverage. It's just really, really important to review these things. It should be reviewed as part of like this annual review where you're looking at your cash flows, you're looking at your net worth, you're looking at things like your liquidity and emergency savings. We have an app that helps people do that very easily. You can do it all on your own. If you would like to see this, program, this app, we can get you involved. Just check out www.harpwithwealthpartners.com. No, we got rid of the W's. Just harpwithwealthpartners.com.
Get out of here, W's.
We don't need you anymore.
Hey, shout out on that topic, the Elements app. I'm a visual person. I'm a visual learner, and I also want the bite-sized pieces.
Yeah.
So that it's been a very, very awesome addition to my plan and my thought process, because I know some versions of it, and a certain level of it, but the way that Element apps functions is man, that's awesome.
It is. The last thing that I want to bring up with you before I kick you out is when we talked about those scheduled items. Again, just more of conversation for consideration is oftentimes when we go and we have our reviews, we get asked these questions. Hey, do you have any items that you want particularly covered? I have a piece of jewelry that's fairly expensive, and I want that covered. If I put that on my homeowner's policy and I lose that piece of jewelry, it will be a homeowner's claim, correct?
That's correct.
So you need to understand what these kinds of claims can do to future cost of homeowners, because it will be a deduction. You will have to come to your own conclusion. Is it worth the money that I'm saving on a monthly basis to just go ahead and put this underneath my homeowner's policy, versus you can take out very separate personal property insurance, right? So for this particular item, I could either have it on my homeowner's policy for like $4 a month extra, or I could get it its own policy and it was like a little under $20 a month. So you're kind of at first like, oh yeah, $4, duh. But
$200 over the year. That's
if I end up doing that and then that piece of jewelry gets damaged, lost, or broken, and I need to replace it, my homeowner's insurance will pay out for that. But then they're going to jack up my homeowner's insurance next year. Possibly. And that's I mean, again, having these conversations, and it's just about cost consideration versus future consideration to say, hey, maybe this isn't what I need to do right now. Like, this isn't the way. Another one that I like for me personally, the last time I went through my insurance review, I found out that I can get like all the technology in my house covered under my homeowner's policy. So I'm a big Apple user. And so I have the Apple insurance, right? Like, I think it's like $6 or $9 a month. It covers I have it for my phone, my laptop, my Apple Watch, my daughter's phone. Like, I have it for all these, every piece of technology is covered. So when we were having this review, they were like, hey, we'll cover it all for you. And we can just put it on your policy and it's like $14 a month. I was like, man, that's pretty. And like, they were like, yeah, if anything, like you could literally on purpose pour water in front of me and I'll still cover it. What? That's crazy. Like, and I was almost about to sign up for it. And I was like, wait, if my phone gets damaged, and the deductible is like super cheap. I think it was like $25, right? But if my phone gets damaged, is that going to be considered a claim on my homeowner's property? Like, well, yeah, but and so all of a sudden, like, well, you know what? Like, my daughter loves to break her phone, right? Like, so I'm going to go ahead and just keep paying the $9 a month. Again, cost analysis. Did I need to save that money? My cash flows are fine right now. I don't feel like I'm wasting it because I'm protecting the premium that I owe for my homeowner's policy.
Well, you spend $100 on your example for a $1,500 phone or whatever, right? So that to me is worth it.
Right.
You go on your homeowner's policy, $1,000 deductible. It's coming out of your pocket, right? Once everything plays off. So it's a cost benefit, and the way those numbers, but again, it all comes back to how it functions and different carriers. There's so many of them. That's why we, love relationships and love talking, because there's a mastermind. It doesn't really matter who's doing that part of it. Everyone has experiences. Everyone's trying to live life and do their thing. And as much as I love insurance, I don't want to sit down and review my policies once a month, right? I barely want to do my budget once a month. So
I love doing my budget. So here's what we're going to do, because I want to talk about this whole concept you mentioned earlier in prep about sharing economy and things like that. but we're going to bring you back because a lot of people are doing like Uber and Lyft and stuff like that. It's a little, but they're also, Airbnb and also like the VRBO stuff. Mm-hmm. Also, I think I saw a VRBO commercial where the commercial said Verbo. I always call it VRBO.
Yeah.
Maybe you guys
I've heard it both ways.
Confirm or deny that. Make me correct. But apparently, if I'm remembering correctly, the commercial called it Verbo.
I'm an acronyms guy. It's a VRBO in my
I've
mind.
always said that. But maybe I'm saying it wrong. And so we'll bring you back for a conversation about short-term rentals, about Uber, Lyft, what about delivery drivers and things like that? Because again, you mentioned the sharing economy. I was really interested about it, but we'll do that because I don't want to have another hour conversation about that.
Just a teaser for it. Just looking around Uber, Lyft, I would think that's so much more than the property. It is now caught up. So
yeah,
if you guys want to tune into that part, I'd love to answer questions around that.
We'll bring you back for that. Okay. Any final thoughts?
No, just grateful for you providing the time and space for this, what you do, and being able to sit down and talk about something we do on a daily basis and hopefully encourage and educate.
Yeah, well, it's just all in my head and I want to get it out there because I think everybody deserves to know as much as they need to. Guys, we have a pretty decent library right now. It's going to continue building. Where we're going, so next month, we're really going to focus. You're going to hear a lot of conversations about how to close out a year from a financial planning standpoint. We put out a newsletter. You can go see some of the stuff on our website, but we're really going to focus on the small things about, net worth analysis to figure out where my growth has been this year, or maybe there wasn't growth this year. How does that make me feel? So we're really going to talk about that. We'll jump into talking about how to set financial goals for 2023. And then we're going to talk, and then we'll move straight into there's some big changes, guys, that are coming for 2023 on almost every facet of things you can do for yourself financially. So we're going to jump in. So that'll kind of be what's coming in the next months. We got a couple more, we got one more insurance conversation coming up. And then we'll bring Mike back early in the year to talk about some of that other stuff too. So
sounds good. That's
where we're headed. We hope to see y'all, hear y'all. No, I hope you hear me again.
A little bit of both.
Oh man, that sounds terrible. I hope you hear me again. I hope you're learning. I hope you're being educated. I hope this is somehow really beneficial. If you guys want specific content, let me know. I'll research it. I'll do all that stuff for you. Because if you're having that question, there's probably hundreds, if not thousands of people having that question. And we want everybody to be as educated as possible. And with
informed
that,
decisions.
That's it. Have a good day.
Yep, see you guys.
We hope you learned from our conversation today. It is important to us that you know this is for educational purposes and not intended to be considered specific advice for any individual listener. If something we discussed is relevant to you and you have questions of how it might be applicable to your specific situation, please reach out to your financial professional. Of course, we are happy to have further conversations with you regarding specific questions or applications to your individual financial situation. With that, here are a few disclosures. Securities offered through LPL Financial, member FINRA, SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Harpeth Wealth Partners are separate entities from LPL Financial. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Hypothetical examples presented are not representative of any specific investments. Your results may vary. With that, thank you, and we look forward to having you back. Take care.